Okay, just few more seconds. Just few more seconds. We are just going to go live. Please, just few more seconds. Thank you. Okay. Thank you. Thank you everyone for the patience. I think we are live now. Okay, Mr. Countryhead, sir, I'll answer your question in just a moment. Brijesh ji, I will answer the question in just a moment, please. Let me just check the live stream. It is properly going or not. Okay, let me take the question first. Okay, let me take the question, Brijesh sir.
Hi, Harsh, how are you? Yeah, I
Yeah.
just came out for this question, so I thought let me ask you because our IT team is working to connect with YouTube so that we can have this answer as well. Thank you.
Sorry, the YouTube link?
Yeah, this the connectivity you are doing is taking time, so I thought let me ask my question so that parallelly we
Okay,
can
okay,
do.
okay.
Yeah.
Okay. So let me answer this question. It's a good one. EW is based on the past data, so how we can analyze the future one. Basically, when it comes to technical analysis, it's about the past data which is being analyzed, and it's about 13 patterns. EW is ideally based on 13 patterns. Okay, and
Okay.
and based on those 13 patterns, we can 85 to 90% probability, with 85 to 95% probability, we can uh, predict predict the market movements. Okay, and that is what we are trying to do right now. It's a very interesting topic for Dow Jones. Just hold on a moment, because I just need to send a link to my teammate for Zoom, and then I'll be free. I don't know if anyone has got the live YouTube link, or I don't know if you are able to see, but we are now live on YouTube as well. So let's continue. So Dow Jones is now going to go towards 37,000 or so in the next 4 to 8 weeks, or 4 to 12 weeks. Yes, in the next 4 to 12 weeks. Okay, I can explain why next 4 to 12 weeks. We have to start counting wave one and wave two. Wave one started on 5th of December, and now we are terminating wave two here. So which is taking almost 2 months. So maybe in the next 2 months or so, 4 to 8 weeks or so, we should be seeing wave three materializing lower. All right. Now with so much of hype uh, on the stock markets, my colleague is uh, constantly sending messages. Maybe he's got some issue. But I'm really sorry for this session. We had to do it in a very short notice. Okay. So 37,000 with so much of hype going on in the stock market that the stock markets in the US have resumed a 20-year bull cycle. If you go back 5 months and read the news, it says it started 20 years new cycle on an uptrend. Believe it or not, the charts are telling us a different story. I repeat, sir, the charts are telling us a different story. And now I'm just going to bring up these five waves are going to break around the 37,000 levels. And then if you look at the daily chart, when it breaks down to 37, only the market would have only completed this part. Please pay attention here. Even after 37,000 levels is 37,000 levels broke, the market will be only reached here. Only reached here. So if you imagine that's the first step after 37 and it's going to go high, pull back, and then the third step is going to bring down so much low. Believe it or not, 2020, the 2020 low, this one is in danger. All right. That's the next Fibonacci target. This is the power of technical analysis if it is done the correct way. And you can come to know the story with such a precise levels if you are not trading right now. But if you are just watching this session, the only thing I request is please note down the levels. Please note down the direction that we are suggesting or the charts are suggesting. We are simply analyzing the charts and telling the story as it is over here. But it is 37, and if you allow me to take the next level, the next level is already pointing below that low. All right. So believe it or not, whatever happens, and of course I may be wrong. I mean we are analysts, we are not God. We could be wrong. I mean there could be one more high left, but even after that high, we will be very careful that that is going to be one last time touch. Ideally, if you ask me a potential trade setup, because that is what these sessions are made of, the potential trade setup or high probable trade setup for Dow Jones is in quotes sell between 43,400 and 44,000, stop above 45,300, and target 40,000 and 37,000. All right, I repeat, sell around 44,000, stop around 45 or maybe 46,000, and target 40,000, 37,000. That is the high potential trade setup, which the charts are telling us a story which could happen. All right. So that was the first one for the session. Let's go back to Euro USD now. We are going to touch base major markets, Euro USD, gold. Uh, I have done something here. I'm going to remove it fast. Okay. Once again, we never straight away, whenever you're analyzing a chart, we never go straight on the 1 hour or 15 minutes chart. This practice has to be remembered, which we will again cover in theory, very detailed way. Euro is also telling us a beautiful story. each chart is conveying us a message, and euro is no different. 5-wave up. Okay, now you know what the consequences of a 5-wave movement are. All right, so 5-wave up. Ideally, the 5-wave up is followed by 3 waves down. All right, so here you have A, B, and C. All right, I'm going to quickly change the degree from minute to minor. So what is the story euro telling us? 5-wave up followed by 3-wave down, and the third wave is again uh, coming around the Fibonacci 61.8%, which is a powerful level to get a bounce here. Ideally, when you complete 5 up followed by 3 down, the next move is 5 waves towards the major trend. I repeat, sir, it's 5 waves towards the major trend, and the major trend here is up. So when we are analyzing euro, it also covers all other major crosses like GBP, USD, dollar JPY, and others, all major crosses. So euro is ideally taking or indicating a strength which it is wanting to go and build in the next several weeks and months to come by. All right. So if we go by the intensity of the move, the correlation is uh, the magnitude of first higher wave is equated by the third higher wave at least. So this magnitude is around 1500 points or 1200 points. If you start counting 1200 from the low, it brings us to 1300 to 1400 as target. All right. So a long-term trader or investor for Euro USD potentially should target around 1300 to 1400 levels going forward. And a short-term trade, let's find out. So in terms of degree, now we are talking about the grandson, okay? So let's say this is the grandson boundary, and we pull out the Fibonacci ratio. The Fibonacci ratio is an excellent tool where the supports are around the same level between 1.024060 is a support, and if that is met properly, there could be a 0.618 drop and as a rally. So the counts can be adjusted as for the third, fourth, and fifth waves. All right. And if you want to change the degree here, it would be ideally the minute degree. Sorry, it's minute, okay? So euro is well supported. So how are you going to place your trade? A high potential trade for euro USD, which we again discussed on Friday, is potential buy around 1.0240 and 80 or 70. Stop loss at 1.0100, and the targets is around 1.0450 and 1.0630. This is a high probable trade setup for Euro USD flashing up on your hourly charts right now. So Euro USD potential long around this zone 0240, 0260, stop loss at 1.0100, and potential targets 450. You see that resistance being taken out. That's the beauty of Fibonacci combined with the waves. And next target is around 630. All right. All right. Next, let's pick up one of the most interesting two trading instruments. Everyone loves to trade gold. I keep on saying this. Let's do it again. Okay, we are going to spend another 5 minutes on this chart. I'm going to tell you a complete story of what gold has done in the past 2 years. Maybe you can sit tight and enjoy. Uh, by the end of the analysis, we should be able to find out a high probable trade setup as well. Okay. So let's start from September, October 2022, from where the story almost started. It's not the complete story, but it's a major story. It's going to give us both long-term and medium-term setup. So that's the long-term picture in gold. I'm going to flip the chart to minor. That's the degree. All right. So what are the charts saying? The charts are saying that the longer degree trend, the fifth wave. Now we know what is the fifth. What is the importance of 5 waves up and followed by 3 waves down? The fifth wave is still incomplete in the metal. All right. So let's take the long-term outlook first. Now we are in a fourth wave corrective decline. I repeat, we are in a fourth wave corrective decline. Probably the fourth wave would want to terminate around the 0.382 of wave 3. All right, and we are actually carving an ABC here. That is happening at a minute level. So we change the degree quickly to a minute. And here we are. So, all right, we've got A, B, and C in progress. We are somewhere. So now we know that we are somewhere at the end of the termination of wave B. So the risk is around 2780, and entry is somewhere currently between 27. I'm coming to the trade specifically in 2 minutes. But for those who are wanting to deal gold in long term, then the targets are. I'm bringing it down to wave 4 here, and the Fibonacci targets are right up there on your screen. It is flashing towards 3,100. You might want to note it down even if you're not trading, ladies and gents. It's around 3,100. So if we allow me to do the path, then once that wave C completes, it is ideally poised to go 5 waves higher. All right. And that 5 wave would ideally go and push through the 31 handle. All right, that's 3100 handle. So this is the long-term trade setup. Even if we do the support channel, these are all the techniques that we will definitely cover in the theory sessions when we do. Now, normally, this is the Elliott channel. I'm not sure. It's not very dark, but that channel is passing through this wave for 38.2% somewhere. The convergence is coming around the first week of March. I repeat, sir, if you allow me to zoom in, let's do that. Now this convergence, yes, short term I'm coming. Islam, sir, I'm coming for the short term as well. So the convergence is coming around March first week. The prices action is around 24.50, and then a bounce. So 24, let's say 2500, 2450, 2500 potential buy. Stop just below that and target 3100. And now on the shorter term, please, let's do on a shorter term. Okay. Now the corrective waves A, B, C, there are several patterns for this corrective wave to unfold, but most other patterns are eliminated. Now we have got two patterns left which can unfold. Number one is called a flat. If if it is unfolding, and I put this one as a high probable trade setup, the flat. Now, flat is a 3-3-5 structure, and wave B terminates below the start of wave A, which is exactly the case right now. So if it is a standard flat unfolding right now, and if wave B is almost complete around 27, 24 last week, then prices would stay below that high and they will continue unfolding 5 waves lower, like that. Okay. So if it's a standard flat, this could be the structure. Entry somewhere around the current price, stop loss, potential stop loss or exact stop loss would go just above that 2780 mark, and target would be 25. I mean, you can go in a series actually. You can go in a series. It's a 26, then 25, and possibly 2450 as well. That is the medium term target. So the short term and medium term view is like uh, sell, potential sell, stop loss 2780 and target around 2500 or 2600. It's going to go step by step, 26 and then 2550. Eventually, it's going much deeper, actually, 2450. All right, that is the first step in gold. Okay, what is the alternate count? Because we have got the high probable count and the alternate count. The alternate count is it could take an expanded flat structure. So if prices break about 27, 24, 34, which is the 78% as well, then this B will go and try and touch the previous high. It will go as close to the previous high. Possibly it will print a new high. So how to deal that way? If it breaks about 27, 34, 35, you might want to exit and allow prices to go up there. And when it turns, because we are going to be connected almost 3 times a day, at least for now, and if possible, I'll be more than happy to do one live session every single day if you all want me to do that. So let's stay connected every single day. All right. Your feedbacks are always welcome. And as I keep saying, your demand is always my command. And we will do that. So we'll keep track on the price action here. If it goes there, and we'll pick up the turn after that. And that is the expanded flat structure. But in a nutshell, gold is expected to decline with an 85 to 90% probability from here towards 2600 and 2500 with a high probability, and the stop loss should remain around 2780. Prices should remain around the 2780 for it to succeed. All right, Mr. I think, Mr. Islam, I've now answered your query. Yes, yes, Bitcoin as well. The next instrument is Bitcoin. If you were there with me on Friday, I don't know, most of them were there on Friday, and we had touched base with Bitcoin, the last instrument. The target was Bitcoin has already started moving towards that target, and if you want to know the bigger picture first, I will be more than happy to show you, and then we'll go down on the hourly chart again. So this story again reminds me of November 2022, where most of the stories began, and now most of the stories are completing or near to completion. So we've got wave 1, wave 2, extended wave 3, wave 4, and wave 5. I'm putting that wave 5 slightly higher, okay, so that we can adjust the minute. See, the father, grandfather is done. We come down now and we touch base with the son and grandson. So here are the minute wave structure. That is wave 1, 2, 3, 4, and 5. And if we allow me to just change the degree quickly, it goes from minor to minute. There you are. And let's take the extension, sir. I'm taking the extension of the uh, minor wave 5, okay? Because the earlier extensions were already met and Bitcoin is already extending that further. So 90,000 drop was minute wave 4, and now Bitcoin is possibly heading towards 111, which is almost hit today. I don't know what was the high, but it was very close to hitting 111. Let's check. It's 108, just above the previous high. Okay, so there is some upside left in Bitcoin towards 111 and possibly towards 125. Now, please remember, we are in the minute. It's not only minute, there is a sub-minute, there is a minute degree and there's a sub-minute degree. We are achieving or very close to completing minute 5 waves and then minute 5 waves and then minor 5 waves. I repeat, sir, minute, minute, and minor. And these are only 3 degrees. And if I go to the weekly, you'll find one more degree. So again, wave 5 completing at least 4 different degrees. So you got to be a bit careful. If you're long, you can remain long with a stop loss just below early Tokyo session low, 99, early Tokyo session low, and allow prices to rise through the 125 handle. If you are not traded and if you are looking for a trade, you can, if you are an aggressive kind of a trader, potentially you can buy, but your stop loss should be just below 99 and target maximum around 125. Personally, I would suggest don't be much greedy and don't wait, please, until 125. You might want to start taking profits if it reaches 115. And this could happen around the next few hours from now. All right. One more thing which is worth noticing is the RSI. Now, normally I don't like I don't use indicators personally, but especially when it comes to wave 5, and I repeat, sir, especially when it comes to wave 5, 9 out of 10 times, 9 out of 10 times, the probability is if you can read this perfectly, then 9 out of 10 times you can hit the right spot. And it is called a divergence scenario where prices are rallying and they are either rallying or subject to rally further. And on the other hand, the RSI is way behind even the previous swing high. All right. Now you see there is this divergence has been going on since the time Bitcoin hit 93. 93 was a peak, another high, lower low, almost another high today, still lower low. It still is not crossed the previous high. So this is called a good amount of bearish divergence. If you're targeting Bitcoin by any means, seriously consider taking profits between 111 and 125. High potential trade setup remains that Bitcoin turns very sharply lower. We are not recommending right now on the short side because we need further proof of a reversal, which is not yet seen, and that proof will come when prices break below 99. That would be the first step. Ideally, I would wait for a price break below 89. I think it was last week, which is wave 4 of one lesser degree termination point. All right. So until we have a break below that 89, we would not really recommend to aggressively go short. But fifth wave is just near to completion, please. So you might want to make note of that. All right. And personally, I have one last chart, 2 minutes, please. This is the VIX indicator, a VIX day 4-hour chart setup, which we discussed on Friday as well. Now, this chart is just beginning to cut loose on the north side. That is minute wave 1, followed by minute wave 2, and then you've got waves 1s and 2s, and that minute degrees are unfolding. So VIX is an opposite of stocks indices. So if VIX is poised higher, as per the divergence rule, price will follow the RSI divergence. Yes, sir. Yes, sir. Yes, sir. Sorry, I missed to say that. So when the RSI, it prices normally follow towards the RSI divergence. So this is called a bearish divergence, where prices are going higher while RSI is lagging behind. So normally the prices would turn lower towards the direction of the RSI. Yes. So what I was trying to say here is when VIX is rallying, that rally, August rally, we all know what happened in August first week. Global markets tanked, correct? That was wave 4 for the global markets. Now it's preparing to rally again. So the story could be repeated. So VIX is also kind of supporting for a potential top across global equity markets. All right. With that note, I'm kind of I really thank you everyone for being here and having the patience while we were setting up the live stream. And if you do have any questions, please let me know right now, or we'll bring it a pause here. We'll be again back as usual on Friday to take another live session. But please do send in your queries if you want a daily live. I'd be more than happy to do that. It's all depending on your feedbacks. We are here to serve as far as possible and to the best of our capacity. Okay, we have a message. Yeah, yes, Mr. Islam, point taken. I've got at least feedback from you and Mr. Shukla, Vinayji. So 45 minutes daily is not a big deal. I think we'll plan out as a team and we'll work out and soon announce as well. So your feedbacks are always welcome. All right, then let's bring it pause before EW sessions. Daily live is a waste of time. Yes, 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 Rishi. I would not be so harsh in saying it's a waste of time, but it is just in line with what we are proposing. We are just short of discussing EW in the class. So yes, I take your point, but ideally it's not. It would not be a waste of time. At least you can note down what we are doing right now, and then you can relate when we are doing the theory. I'm sorry to yeah, no problems, no problems. But any form of traders engagement, I consider it's never a waste of time. That's my personal opinion. But no problems. I really want to, with folded hands, I want to thank you everyone for your presence here and for being patient enough while we were setting up the live stream. And we will meet for the education. We will meet for the English education tomorrow, Hindi education on Thursday, and the live session on Friday as usual. Once again, a humble thanks, and until the next one, please take care and God bless. Goodbye. Yeah, thank you for the comment, sir. And yes, we'll come back. Yes, Shrishti ji, we'll come back. The in Hindi as well. We'll do these sessions in Hindi as well. I have it in my to-do list. All right. I just need to talk with my seniors and get approvals, and after that, we will be on the floor. Yeah, thank you, Vinayji. Thank you, Mr. Khan.
Thank you, Harsh. Thank you very much for time. It's really very fit for everyone. Thank you very much.
Thank you, Brijesh sir. Thank you as always. Yes, thank you, Islam. I love the word stories, and you are also picking up that way. Thank you, everyone. Thank you, Mr. Ravi. I saw you came in early, but thank you again for joining, sir. Thank you, Jaideep. Thank you, Javil sir. Thank you, Mohammed sir. Thank you, Mr. Admin, for your presence here. And now I